this market has taken a total dump today, and we are now looking at prices below $22,000. I want to break this down for you because there's so much going on in this market right now. The first thing that we have to acknowledge is we have now fallen out of pretty much every wedge that you could possibly draw. I was veering on the side of optimism, basically saying that, you know, as long as we don't lose our support levels, we're still good. But this dump really intensified today, as you can see, and we have now conclusively dumped out of this Ichimoku cloud as well. This is the second time in a row where I told you guys that I thought we could actually challenge the Ichimoku cloud a little bit better than we did, and I think that's telling us something about the strength of the market. By the way, if you're wondering where I am, I'm in London. I do not have my normal setup right now, but fuck it, we're still making a video, ladies and gents, so smash up the likes and make sure you are subscribed to this YouTube channel if you do appreciate the dedication to this game right here. We're married to the game, ladies and gents. Let's take a look at this. So when we got this dump, you know, it's come in a few different interesting ways, but the first thing that I think is really important is we set this low right here at 21.3, and observant viewers will know that that's where we are right now. And importantly, we actually formed a series of continuation patterns on the way down. The main continuation pattern that I'm going to focus your attention on now is this one right here. Let's just go ahead and remove everything. Is this right here on the 5-minute time frame. We're going very degen, but the reason I'm showing you this 5-minute time frame is because this is actually on an area of the market where we had a lot of liquidity, right? And so when there's a lot of volume being exchanged left, right, and center, it's a lot easier to zoom in, and you're not like purely analyzing what's happening with bots. You know, if you look at the price action that was going on a little bit earlier, you know, you wouldn't really, you know, on the 5-minute time frame, this isn't telling us anything. This is just a liquidity hunt and then back down. I mean, it's just disgusting. It's only bots dominating the market. God knows why people try to disagree with me on this at some times. Most people don't. Most people understand, but some people just don't fucking get it. But this is this is where, and by the way, this is not my opinion that that's where bots are. Like, you just have to study how they operate, and you will see that that is only what happens when it's bots ruling the market. But now it's humans, it's emotion, so we can play a little bit, we can zoom in, and what I really want to focus your attention on here is this descending triangle right now over here that we had, because this was you know, initially we pumped up, we had a bit of a recovery. Actually, if we measure this from from low to high, that was a 4% move, and it happened fairly quickly within like 30 minutes. And from there, we ended up falling back down to this floor. Now, this floor was exactly where I said I want to see Bitcoin hold. This was at 21.7. You guys know I was looking at 22.7 and 21.7. So this level did unfortunately end up breaking, but it did put up a bit of a fight. So, you know, that's nice to see. It was even right here on this wick, we found some support. So that analysis was correct, just not for very long. And if we take a little bit of a closer look at what happened next, this did then initiate that next leg, which put us in what we are in at the moment, which is basically, I'm sorry, I'm being a little bit fat-fingered today, which was basically this rising channel, I'm gonna say, not a rising wedge, but a rising channel that we're in right now. It doesn't really matter though. The bottom line is that this was a pattern where the market was, in my opinion, just consolidating, and this is another pattern where the market is, in my opinion, just consolidating. And you know, you can kind of guess what that means, because the thing is we lost a really important level. You know, we look at this on the 1 hour time frame, and it looks horrible on the 5-minute time frame, because, you know, this green box, I'm going to show you in a minute, this green box is an area of support, or was an area of support for Bitcoin. We pretty much, I mean, we just barely got something off it, and now we're below it, and we're actually coming back up for all these horrible rejections right now, ladies and gents. So you know, it's definitely not looking too pretty here, but if we zoom out onto the 4-hour time frame and just kind of put this area into context for us so that we can understand where the market is, you know, this is quite a critical level for Bitcoin, guys. You know, we had two significant areas of resistance. We had this area right here when we were trying to punch up. We couldn't break above this area. It helped us, but barely. I mean, really barely. You know, and by the way, when the market does stuff like this, I hate to say it, guys, I really do, but when the market does stuff like this, you know, we're generally going to be in positions where, you know, we're not going to recover, because, you know, if we had, you know, I mean, look at how heavy this resistance area was. I mean, I know we had our, you know, deviations above these levels, and, you know, you're going to know all about this stuff if you've been subscribed to the channel, because we have been covering this recently, so just double check. I'm not going to repeat it now because most of you have probably already heard it, but if you're not already subscribed, if you haven't already ticked the bell, just go ahead and do that. You can just rewind the video as well if you want to catch that anyway. But you know, we did have these deviations, but bottom line, guys, we were getting rejected from this yellow box. And you know, just to remind you, in case you've forgotten, this yellow box was the only area of consolidation that the market had when we initially broke above $20,000 way back at the end of 2020. So very, very significant price area. We did use it as resistance. We used it as resistance consistently, predictably, and we got some fairly large you know, tests off it. This was fairly large rejections. Yes, I did draw this from the deviation, but I mean, even if we draw this from the top of the range, it's still a 12% rejection over here. It's a 6% rejection over here. It's a 4% rejection, and these are smaller than what actually happened. You know, our real rejections were slightly bigger because, you know, we deviated above the resistance, you know, and still with all of these resistance areas, that resistance hits that we got, we didn't get anything on the support side. I mean, this was a lackluster consolidation. Another this consolidation is insulting in my opinion. Like, you know, it's almost like the market kind of tried to do something and the bears are just like, no, fuck off. Like that's what I'm seeing here. But you know, eventually the next thing we did is, yeah, that was support area number one. Support area number two, you know, we're also not doing too well with, you know, this area. Again, previously acting as resistance very, very nicely. You know, it did act as support very briefly on a few occasions, but really it was quite rare. And this time, no support, guys. You know, when the market, like I said, when the market is just kind of plummeting right through support areas in ways that you really just wouldn't, you know, that it wouldn't be okay, really. I mean, you just couldn't really expect it. You know, that's a sign that things could be getting really, really bad. And, you know, the best example of this is definitely what happened when we plunged below $30,000. You know, looking back, a lot of YouTubers are taking credit for this like they really saw it coming, but that's total bullshit, because this was a really good support area that we had, kind of stretching between 30,000 to 34, and everybody, absolutely everybody, was expecting there to be some bounce off this range. You know, like obviously in hindsight, it's pretty easy to see what happened, but right now, if I just show you this chart, ladies and gents, you know, hopefully this is going to start to become very obvious to you. This was, you know, this was quite a critical area of support. You could even maybe draw it a little bit lower if you want to be extra generous, but I don't even think you need to. You know, everybody was expecting something off this level, but we didn't get it. You know, we didn't get it, and like I said, the annoying thing to me now looking back is that everyone's trying to, you know, it's like the it's like the White House and Federal Reserve and whoever comments on inflation, you know, adjusting, it's the White House, right? Adjusting their definitions of inflation, or dare I get more political, how definitions of words like vaccine have literally been changed in the dictionary. And I'm not trying to say for or against anything, but it's funny how people are just redefining things, you know, in ways that, you know, previously everybody knew what these things meant, but now, you know, we're coming around to a time where they just want to change their agenda, including on YouTube. So be careful of who you're viewing, and people are straight up lying, and you cannot give them a pass for it. People remember things. That's all I'm saying. So I don't understand why people lie about these kind of predictions. But in any case, you know, we did not get a bounce off this level, which you know, which was definitely quite a surprise. And what it meant, just like right now, how we're not getting bounces off these levels, and what it meant was that, yeah, the market wasn't going to be able to hang around in this level for very long, and we ended up dipping down. I should say, catapulting lower. We fell off a bloody cliff, ladies and gents. It was absolutely horrible. Really, it wasn't ideal at all. And that was the warning sign, was that we didn't get a bounce off our support level. The fact that we didn't get a bounce off our support level was the warning sign that there could be something much worse coming around. And that takes us to the present moment right now and the title of this video, because we are consolidating again. The last time we had a consolidation, now like I said, this was the horrible, I mean, it was barely anything, but it was 5 hours that the market paused. We then, dumped by quite a bit. This market is down quite a lot. I mean, it's fair to say that we are potentially a little bit overextended, but this is the thing, is that we look at things like, you guys know I've been looking at the long and short ratio quite a bit. Guys, look at this shit. Binance, majority long by a ratio of 2.06. That means for every one trader that's going short, there's I'm sorry, I'm on the wrong time frame. That's embarrassing. What's the real data? It's close enough, right? For every one trader that's going short, 2 are going long. Like that is enormous. That's absolutely huge. And Bybit FTX, they are actually majority leaning short, but not by a whole lot. So I don't want to make too many comments on them too, but Binance obviously being the more retail exchange. Guys, by the way, if you're still on Binance, I don't know what you're doing. I mean, they're good. They're very, very good, but I don't know any serious traders that use it. Me personally, I'm the only place I trust with my trading activities for all of these years has been Bybit. And if you want to check them out, you can get over $4,000 by signing up to them, by following my link in the description. But that offer ends very, very soon. May have already ended actually, so make sure you check this out and take advantage of it while you can, if you still can. No matter what, even if it has ended, you still get bonuses for signing up using my links in the description, so definitely check them out. And when you do follow this link in the description, I'll also be showing you how to claim those bonuses with this video. So super cool, well worth checking out. I will see you there if you're interested in getting some free cash, regardless of if that campaign is still running. But that's the thing, is we are seeing with these long and short ratios that especially with the more, how do I say, mainstream, beginner friendly platform like Binance. They're all beginner friendly, but Binance just seems to attract them. That it is an indication of where the dumb money is. Like, I'm just gonna cut straight through the bullshit. It indicates dumb money. And so if a lot of people are still going long, one of the things I'm gonna wait to see is the fear and greed index when it updates. We've got another 4 hours on this. That's gonna be quite important to me. But yeah, we are consolidating under our support level, and we are showing all these classic hallmark signs that the market is not going to be able to recover in the same ways that we've seen it before. Now, does that mean that we can't? Absolutely not. One of the ideas that I really like, because this market seems to deviate so much, I haven't actually spoken about this publicly yet. This is the first time I'm saying it. So guys, throw me a like on this video if you haven't done so already, if you do appreciate that. Let's see which chart would be most appropriate to draw this on. Let's do it on this BitMEX chart. Really all I want to show you is, well, first of all, yeah, I'll just draw this wedge. This is the most important thing. Bam, right there. So pretty conclusive drop down now. This is obviously pretty horrible, but the other thing that I just want to point out is all these deviations the market has been having, right? I mean, the market just is in deviation fucking city right now. If I draw a resistance line right there, another resistance line, where it was realistically, which would have been 24.2. This was back in 2020. I just know this level off by memory. I'm not going to go back. You can see all these deviations, all these wicks above our resistance levels right here. I know it might not look like a lot, ladies and gents, but I wouldn't call this a deviation, but this certainly was, and this for sure was. These are quite a lot. I mean, the market hasn't been moving much in the last basically 60 days. It's been relatively slow. From low to high, it's up by 44%. It's actually quite a bit, to be fair, but it's across 60 days. It's a very large time frame. And both of these I'm sorry, what's going on here in the background? Both of these patterns that the market was in, you could separate them into, there's one ascending triangle and then there's another ascending triangle. So this one was 30 days and we got 3 deviations in 30 days. That's quite frequent in my opinion. I mean, I don't know about what you guys are thinking. Let me know in the comments, but to me, that's pretty frequent. And it's not just here, we deviated below the 20K low. If we take a look at this $20,000 area right here, this was, this was the support area. Yes, of course, you can make a million arguments for for why, you know, we bounced off this level, but the bottom line is that nobody really was expecting it. You know, so that's another deviation. You know, and you can kind of start to see where I'm going with this. You know, this market is deviating so much, and you know, by the way, if you're wondering why, it's just the liquidity, guys. You know, it's just the dumb money. You know, that it's where the stop losses are, it's where the liquidation levels are, and it's the fact that the market is illiquid. That in itself is a whole other discussion, but if you want me to make a video on that, just let me know in the comments. Just tell me you want me to explain why deviations keep happening. In my opinion, it's not, it's super good to know. I mean, as a trader, you should know it, but it's not the most important thing to understand at a time like this, in my opinion. But in any case, if you want me to make a video on it, let me know in the comments. Here's the thing though, we keep getting these fucking deviations. Well, guess what? Maybe this was a deviation too. It would make a lot of sense. It wouldn't make complete sense because it didn't work. We're still majority long, which means that not enough stop losses have been hit, or that potentially as those stop losses were hit, people were just adamant that we're going up and just kept on piling in those longs anyway. It means either of those two things. I don't know which one it is, but it can only be one of those two explanations, in my opinion. You know, and so unfortunately, yeah, it's not quite the best situation for a deviation. That's the problem. You know, like I was looking for what is the silver lining with this analysis, what is the silver lining with this market right now, and guys, I don't see one. I don't. If I do, and when I do, because I'm sure it's going to come up, I'm going to let you know. You know, the thing about this market and giving out analysis is, you know, people often think it's black and white. You know, people think that, you know, well, I think it's going to go up, and I think it's going to go to $30,000, or I think it's going to go down, and it's going to go to 14. It's a very one-dimensional view of viewing things. It's a one-dimensional perspective, guys. This is the kind of thing that we tackle inside of VIP. You know, not only this, but how this translates into trades and tackling these markets, doing well in these markets. You know, I have been trading over this period, and I'm going to continue doing so as well. All of those updates go into VIP, including the kind of explanations of what I'm doing, the behind the scenes reasoning of why I chose certain levels, and then I detail everything, like my entry, my stop loss, my targets, and everything, absolutely everything from start to finish. You get it inside of VIP, plus a bunch of extra free content in the VIP library, in-depth breakdown videos of previous trades, super good stuff. Check it out with the first link in the description. There is a discount running as well, so it's your lucky day. But back to the topic here, the thing is being bullish and bearish as a slider, right? I mean, it's in my opinion, it's not a slider, my bad, it's a spectrum. In my opinion, this is me. You know, you've got extreme bullish on one side, extreme bearish on one side, and the way I see it is this kind of, you know, depending on how far you are on one side, just with your, you know, when you're trying to be objective as an analyst before you're in a trade. When you're in a trade, you're being totally subjective, but before you enter the trade, you want to be 100% objective. You have to be able to make that switch. If you can't make that switch from objective to subjective, you'll never be able to commit to a trade. And if you can't make that switch back to objective, you'll never pick the right trade. So it's a really, you know, again, this is the kind of thing that like nobody talks about. Absolutely nobody talks about. I'm going to teach you how to do it. So super in-depth stuff going on here. But this slider, it gets affected by things, you know, like an event like today. This is going to push me way more to the bearish side, guys, because, well, we ended up dumping out of what is already a bearish pattern. We've collapsed below support levels. It's not going to do good things to my confidence levels for the market, right? And that's the kind of thing that you know, I think is really important to acknowledge. But like I said, these things will come. You know, there is going to be something that, you know, I mean, this is why the market moves. You know, when we fall out of a wedge like this, yes, of course, everybody wants to sell, you know, so the market drops quite dramatically. And of course, there's some stop losses being hit and so on, and that makes it worse. You know, but bottom line, this is still a functioning market. You know, I mean, we're trading sideways. So, you know, that tells us that we're at an equilibrium. It's not that obvious. You know, it's only extremely obvious when the market is in free fall, because that's where nobody is buying. But over here, clearly buyers are stepping in, sellers are easing off. You know, and that tells us a little something about how the market is trying to figure out where it wants to go. And, you know, our job as analysts is to you know, look at the probabilities of each of these things. You know, try and understand, well, what is the market telling us? It's telling us that we've had you know, quite a consistent but slow dump. suddenly intensify. Now we are under key support areas that failed to help us, you know, and potentially the S&P 500 being another element in this. I mean, you know, I don't see any significant levels for the S&P 500 now until it drops down to at least a little bit lower. If you guys were watching the live stream that I did with MDX Crypto a couple days ago, by the way, so much good support on that. Thank you all so much. I'm going to do many more live streams for you guys, hopefully, over these next few weeks. But what I did say with MDX Crypto on that live stream was, you know, the S&P 500 looks pretty, you know, I mean, it looks pretty overextended, guys. And we've been talking about this on Telegram as well. If you're checking out those that first link in the description, you're going to know about this. But, you know, the S&P 500 has rallied up by quite a bit. You know, it's not very characteristic to do so without a pullback. And so, you know, we're in a pullback right now at the same time, because, guys, I like to string in what's going on in the real world. Look at the dollar. The dollar had a huge run up over these last few months. Well, pretty much since the beginning of this year. The dollar has been fucking flying, absolutely soaking up. It's not necessarily that people want the dollar. It's just that they don't want other currencies more than they don't want the dollar. Which is to say, and I need to get this right because I want you guys to understand this, which is to say, the dollar is already not attractive, but other currencies are far less attractive than the dollar. You know, and that's why we're seeing this happen right here. But look at this. We ended up topping out kind of where we expected we would, just above this green resistance area. We had a huge drop down with the dollar, and now it's all been recovered. It's all been recovered pretty much. You know, if we look at when this drop initiated for the dollar to its end, it took 27 days to drop down by 3.64%. And we're already up by more than that because obviously, you know, we move more on the upside and move less on the downside in terms of percentages. But we've already recovered most of that drop now within 1 week. You know, what took us literally 4 weeks to dump, you know, was recovered in 1 week. So the dollar phenomenally strong right now, very, very strong indeed. You know, I don't know why people aren't talking about this because this affects the market directly. It's looking pretty crazy, but we are in a resistance area again. So resistance areas, you guys know the deal. You guys know the drill here. You know, we are staying objective before entering a trade. This is what it's all about. Resistance areas, you know, they are where rejections happen. So does it mean we're gonna have a rejection now? No. Does it mean we're likely to have a projection now? Yes. I'm sorry, a rejection now. Yes, it does. You know, and that is because we're at a resistance area, and it's just as simple as that, at least from my perspective there. So, again, we move back to Bitcoin. What does this all translate to for Bitcoin? Well, you know, with the dollar, if we're going to see a little bit of a drop in the dollar, that's good for Bitcoin. But the S&P 500, I think, is far more important for, you know, Bitcoin's at least short-term health. And I do not see anything good for the S&P 500 until we drop a little bit lower and capture some of the support that is below us. Let's actually look at the momentum right here. Lots of 4-hour momentum from right now up until the bottom of this, or down until, I should say, the bottom of this support area. So that's a good sign. There's good stuff going on. I like what I'm seeing. You know, personally, I did look at this earlier today, and I think that dropping down to the bottom of this range would be super healthy. The reason I'm saying this, and I know we don't usually talk about fibs with the S&P 500, but the reason I'm saying this is exactly the 618 Fibonacci retracement area. So, you know, I mean, it's not like the S&P has to, you know, the S&P kind of does what it does, right? It's not. Let's see how consistent the fib is with the S&P 500. I don't think it's super useful. Yeah, it's not. I mean, you know, well, it did kind of fall just a little bit lower than the 382 level, and then we're back up. There's a little bit of confluence at 236. So yeah, there is something here. You know, but the 618 level, you know, would make a lot of sense. It would be quite a deep cut. You know, what would it mean for Bitcoin? It would probably, I think it would mean Bitcoin drops down to $18,000, $19,000, $17,000, maybe a little bit of a double bottom situation, you know, and then this thing kind of potentially, you know, really rallies up. It would also be the healthiest thing for the market to do, in my opinion. But like I said, this is the first area of support. This is the first line of defense. If this is broken, then we can talk about you know, falling all the way down that low. But for now, you know, this is what the market has, and this is, or I should say, what the index has, and this is what I think it's going to use. And if it does do so, again, you know, what does that translate to for Bitcoin? Probably, you know, another couple $1,000, you know, something like that. I mean, nothing nice. Probably, yeah, I would say down to the, you know, low mid 20,000s, somewhere around there. I think Ethereum is in for a bit of pain, really, because it's got this huge area in the market that you guys have heard me talking about so much. You know, if we collapse below it, there's not really anything going on Ethereum's chart until quite a bit lower. So the last time I put this on your radar, I said the opposite. You know, I said that Ethereum can probably get a 30% pump from here. Now I'm going on the record and saying that it could probably get a 23% dump from here. So, and this green line is just, shouldn't really be there. That was just from a previous drawing that should have been deleted. So quite a big range for Ethereum. It's a lot worse than Bitcoin. Quite easy to see why. Ethereum has gained a lot of strength against Bitcoin. Now it might be time for that money to leave. One of the big ideas that I have for this is if you, I was actually just listening to 𝗪𝗘𝗙𝗧𝗜𝗔's video. I just flew from Dubai to London today, and I was just listening to 𝗪𝗘𝗙𝗧𝗜𝗔's video. You know, he was, by the way, he is one of the only guys I still watch on YouTube. So you know, if you like my content, you're gonna love his. He is, in my opinion, like a version of me that's like 10 times better. So definitely check him out. You know, one of the things he was showing was the YouTube and Google Trends data, showing us that you know, it's not really like interest is going up right now in the space. You know, it was going up during that rally. You know, and generally, if we're not seeing, you know, kind of new eyeballs getting onto the space, and you know, people discovering Bitcoin while the market is rallying, well, then it just means that money which was previously in the market has now entered the market again, or now is leaving the market. You know, and again, these are all the hallmark signs that it's gonna get really bad. You know, like it's usually the kind of thing that we see. I'm just saying the facts, guys. I'm just saying what's out there. I don't like saying it either. Fuck me. I don't want to see Bitcoin dropping, but that doesn't mean I'm gonna be a bitch about it and ignore reality. No. That's not how we do it. That's not how we do it. This is the 𝗧𝗪𝗡𝗡𝗧 YouTube channel, and we are staring truth dead in the eye and then grabbing it by the balls and dominating the market anyway by trading it. So that's what we're all about. That's what I'm trying to bring to you guys right here, and this is potentially a similar setup. So for now, guys, my hands are off the market. I don't want to be involved in this. The risk of, you know, getting absolutely wicked up or something like that is too high. You know, it is definitely oversold in any case, in my opinion, at least. I mean, not with the literal definition of oversold with the RSI, but I just think it's had a little bit too much selling. You know, it puts us, you know, Ethereum's in a really nice support range. You know, definitely coming up would make a little bit of sense. Maybe up to this area, capture a little bit of resistance, drop back down. I think that would be super plausible, super healthy. So you know, that's the kind of thing I'm looking at for the real short term. It's annoying that I'm saying this at the end of the video because this is what I think will happen directly next. You know, but now people who've only made it to the end will hear that. So anyway, you are in an elite squad if you've made it this far. Because absolutely, yeah, I think that this is what we're looking at for the very next move. But in any case, I think the larger time frame pattern is not going to be appealing. So there you go. I hope you have found this video useful, guys. Once again, get some free cash and sign up to the best exchange in the world, which is what I would say. You know, I have been using them for a long time. I've also been working with them for a long time, so obviously I have an incentive there. But I do love the exchange. That's why I use it. I wouldn't you know, blindly put my money anywhere. I'm very particular with what I do, and I have arrived at Bybit as being the best in the space. So check it out, get some free money for doing so. And if you want to really learn about all of this stuff and then watch me trading in real time as well, get inside of VIP. Ladies and gents, most of you joining are going to be getting free access into our 𝗧𝗪𝗡𝗡𝗧 Academy courses as well, and it's all discounted right now, so there's no better time. All right, guys, I'll see you on the other side. Really hope you have enjoyed this one. You know what to do if you have. Hit up the likes, subscribe, tick the bell, and I'm out. Peace.